Hello, hello. Hi, guys. So, welcome to our Rails and Spicenet AMA Twitter stream. And today I'm joined here by Matt and Kartik, both from Spicenet, talking from London. Well, you can expect what the day is today. It's like raining, cold, and this is not snowing. So I thought maybe we can start with some quick intros and maybe tell people where talking from and introduce yourself a bit and explain how what you've done in the space so far, where you're coming from, and why you're here. Let's maybe
Yeah,
start with you, Matt.
yeah, totally. Yeah, thanks for the intro. Thanks for having me here today. It's definitely a pleasure to come join you guys. Calling in from Canada, it's definitely snowy here, but I actually like it. It's beautiful outside. I won't be able to show you guys, but there's nice trees in the backyard here. They're all covered in snow, and I haven't seen snow yet this season because I was in Abu Dhabi. Before that, I was in Spain. So I'm actually looking forward to playing around in the snow a bit here, spending some time with family over Christmas. But yeah, I've been in the space for like 8 years now. It's kind of always been my interest. I started buying Bitcoin when I was 15 years old. So yeah, it's pretty much anything that I've ever wanted to do in the professional world has been in the Web3 space. Same goes for Karthik. Him and I met building a Dex on Solana back in the day. We ran into a bunch of issues on the distribution side, on the liquidity side. Solana wasn't as cool at the time. EVM chains were a lot cooler. So we started building SpiceNet as like a way we're going to host our application and have access to more liquidity, more distribution, higher performance, all of these things. And then we realized that this is a problem that everyone's having, and especially with all these new chains being built, there's a lot of really cool use cases being created in crypto. I mean, in the past year alone, like there's been, I think, over 5,000 apps that have come into production, but we're still having a really challenging time accessing anything beyond like the top 10 protocols, because for any user, accessing more than one or two protocols is just like super complex, super expensive. It gets risky. You're trying to always bridge. You're losing your edge when it comes to like the latency and the costs associated with that. So we saw SpiceNet as a much bigger opportunity to take all of the problems that we had fixed and allow other people to integrate our solutions via API or SDK to get solutions to those problems. So now SpiceNet is acting as like a brokerage network, because in traditional finance, this is what gives you access to all of these things in an easy way. You go through a broker. Either you're a retail user and the broker just helps you out through your banking app, or you're a high volume user and you have a personal relationship with the broker, and they allow you to have all this cross margining facility and all these other perks. So for us, our goal is to build all of those benefits at an infrastructure level that anyone can use, and it's open to the public to integrate and use however they want to. Yeah, that's really the mission. I guess I'll let Karthik also introduce himself and how he got into the space.
Yeah, sure. I'm Karthik. I'm the other co-founder of SpiceNet. At SpiceNet, mostly do product and technology. I got into crypto back in 2020, so it's about 5 years now. Initially started off as like a trader, market maker on centralized exchanges, then moved to building a DEX in Solana, which is where I met Matt, and then we started building out SpiceNet together. Yeah, that's a bit about me.
Cool. And just quickly about me. So I'm a co-founder at Rails, and Rails is this blockchain we're building from scratch, EVM, of course. So it's compatible with SpiceNet because it would be weird to be having this conversation if it wasn't. And it's made for banks. So we're trying to solve the problem of financial institutions that want to use blockchain. I mean, blockchain has been around for a long time. We've been in crypto since 2013, so we have a long time now. And still there's not many financial institutions that really use public chains yet. And so we're trying to solve that problem. And I think SpiceNet is interesting because one of the issues and the challenges we have with today with crypto is that the space kind of evolved in a way that we have so many chains, right? Like you have Arbitrum and all the derivatives of Arbitrum, and you have Rails now, and you have zk Sync, and you have Ethereum, and you have Polygon, and so many chains. And so is part of what you guys doing is kind of create a system whereby you can access the liquidity or combine the liquidity and the DeFi protocols of all these different chains in a way that people can, like, just from a single place access all of it?
Yeah, totally. So we've seen other people kind of try to do this by slapping like a band-aid solution on it, and there's been some successful ones. Like what I'm kind of getting at is like a Jupiter on Solana. Like those are cool. Those are able to take different liquidity sources and provide them in a front end for the end user. But the reality is, like, even when you have these being built, you have a bunch of these solutions being built, and those are separate from each other. And even accessing different ones of those becomes, I mean, not really doable at all, right? Like it's technically doable, but not in a way that it, retains the edge you have as a trader. Um, so these are kind of the problems we were seeking to fix because, yeah, like a year ago, this wasn't much of an issue, or 2 years ago, not much of an issue. Most of the tech that you were going to use was going to be on one or two chains. Now we have like a lot of different blockchains building really unique characteristics that are all viable. I mean, there's still so much to build in DeFi that some of which is coming from traditional finance, and some of which is totally new use cases that are totally viable.
Yeah.
But the reality is, like, it's obvious to us that nobody is going to interact with these things in a super hands-on way where they have to physically bridge their funds all the time because it'll take away their edge. It's really important for the assets that are high quality, like you guys are bringing on chain, are able to be margined with other things in the ecosystem, because that's where the true unlock for those powerful assets come, where you can combine them with the wonderful tooling that's built elsewhere in the space, and sort of get the ability to margin between your position. There will be like the crypto assets that are also viable. There will be the yield bearing assets you guys are created, right? So yeah, to summarize, it's obvious to us that people will want to interact with different blockchains and venues the same way that they interact with different markets and traditional finance. The challenge is doing it in a way that aligns with DeFi, allows people to do this permissionlessly, allows people to custody their own assets still, because these are a lot of the reasons why we're going to DeFi in the first place. So that's sort of the challenge that we've taken on and solved, is making it an infrastructure and not like a player that you have to trust with handling all of this access for you.
Okay, so let me try and like explain and understand for people listening what exactly this means, right? So you're saying, let's say for example, I have an asset that is, or let's say I'm a user that is in Arbitrum, a crypto user, and I'm a trader, and I want to kind of maybe interact with an asset or a DeFi protocol that is in Rails. How does Spicenet help with that?
Yeah, so we have one product, Spice Flow, that can just be integrated directly into the front end of the product, assuming the product you're referring to, it has a front end. That would allow the user to show up with their Arbitrum wallet, connect their Arbitrum wallet directly to this platform, and just use it with their Arbitrum assets. So let's say, like, for simplicity's sake, the application on the Rails side is like a Uniswap fork, right? Like a swapper, right?
Swapper.
But then it has all the great assets that you guys are bringing, right? So I might want to get access to those assets, and I might not want to bridge, right? I might not want to have to manage my liquidity on the other side. I might just want to connect directly and say, oh, I have Ethereum on Arbitrum and I want to buy this asset on Rails. I could just do that directly through the swapper without having to do any of the steps before that gets me set up to do so.
So it's basically a way to kind of to, like, say, remove complexity, because really I said, I've been in crypto for what 12 years now, and oh my gosh, like every time I have to bridge anything, it's a pain, right? Because there's so many different bridges, and then you need to have the gas token of the chain, and and then the destination chain, I never have Ethereum there. Then you have to load Ethereum there.
Totally.
It's such a journey, right? And so you're trying to abstract away all this complexity and make it possible for people to kind of just be on the chain they prefer, and then still be able to kind of buy and sell and swap things with some other chain.
Yeah, exactly. And just going back to like the process of bridging, if you want to hear an embarrassing story, like I have also been in DeFi for a really long time. I've been using DeFi products. I mean, they weren't that usable 8 years ago, but this is when I started really paying attention to the space, and I've always kind of been using them as they come out. So I'm very familiar with how to do this. I know very well how to bridge. I don't like to do it, obviously, because it's annoying and takes a long time. But even for somebody as experienced as me, like you can also mess that up, which which is not okay with retail. Like we're trying to sell these products to retail, right? And trying to bring people that aren't very Web3 savvy into this space. And I did this, I think 2 months ago now. I was trying to send money to my off ramp, which was on Ethereum, accepts Ethereum only on mainnet. And I had assets on Solana, and I did like a bridge directly to this wallet on Ethereum, but I accidentally selected base Ethereum, and I just like punted the money into the ether and lost it.
Oh, no.
Yeah. So, anyways, all that to say, even for somebody with experience, like you can be sleepy one night and not realize that you're looking at the base chain Ethereum logo and not the ETH
You're having
mainnet.
a beer on a Friday evening, you press the wrong
Yeah.
button.
Yeah. So the nice thing about brokers is they dummy proof things. And as much as like a lot of DeFi abandon your broker because they stop you from doing things that you want to do, whatever, the UX doesn't have to be such that I can easily do stuff like that that's really stupid. And that's kind of what we have right now. And at a certain point, we have to find this middle ground between like, the broker makes sure you're doing everything right and they only let you do like a couple of things. And then like, oh, you can do anything, even like punt money into the abyss by accident, right? So finding the middle ground is important. And I think that's part of the journey is what we're building as well.
Yeah, and I guess one of the advantages of this is like, say for example, in the case of Rails, right? What is the thing that we bring to the market is because we are aimed at like banks and financial institutions, a lot of the assets we're bringing on chain to the public chain are kind of like regulated yield-bearing assets, like receivables, for example. It's a famous case that we've been discussing a long time. We had an AMA with Nuclea, which is one of our large clients. And they were explaining how they are tokenizing commercial receivables. So these are like basically debt instruments, and they pay yield. And because they come from like a third world country or a developing country, then they pay like 15, 20% APY, which is great, and then you can put this on chain. But the problem is, let's say for example, they are putting this on the Rails public chain for distribution, because in Rails they tokenize on private chains. This is how Rails works. They tokenize on private chains and then they kind of transfer them over to the public chain.
Right.
And the thing is, in terms of distribution, let's say, I mean, it's kind of obvious, but there's more people outside of Rails than there are people inside of Rails, right? So there's more people using all the other chains, EVM chains, than there are people using Rails. And so I guess, one of the advantages of this, in a way, I mean, one way to look at it is you're democratizing access to different kinds of, assets for people. Like, for example, someone that never heard of Rails, they can now get this, 20%, yield-bearing asset that is from Rails, is regulated and safe and secure, but they don't even have to never open Rails before, right? And I think this is one of the ways that, one of the advantages of Spicenet.
Yeah, totally. I think you nailed it there. Like, to summarize that, it's like people are bringing instruments or assets on chain because that gives them distribution to way more capital, especially in the long term, assuming like we just continue to scale and a lot of more funds move on chain. But then at the same time, humans are very territorial and also stick to what they know. So when you have to convince somebody, let's say, to come to your blockchain, it's an onboarding process. You have to tell people why they should move funds to your blockchain, and usually they need multiple reasons. It's like it almost feels like this barrier to entry where it's like, oh, do I want to bridge my funds to Rails just because I see like this one cool product? No, I'll wait until everything on Rails looks really interesting. And now, oh, there's this whole economy I want to interact with and not just one thing. So I'll do it. But that's kind of dumb, right? Because if there's one good thing that's built on Rails, we should just be able to access it as easily as if it was built on Ethereum. And yeah, I think that's one of the cool things. So
Yeah.
I mean, I'm curious, like what are some of the assets or applications that you're most excited about that you're seeing on Rails right now that you think like users on Ethereum and other chains will want to use?
Oh, for sure, is the one I mentioned now. Like we're very focused on kind of these yield-bearing assets coming from financial institutions. I'm sure people remember. I always make this analogy. You remember Terra Luna, of course.
Yeah.
Terra Luna was a stable coin that I think they paid 20% per year APY or something like this, and a lot of people put money there because I mean, who doesn't want to make 20% per year on a stable coin, right? But the problem is it wasn't that stable. It just kind of exploded because I mean, it wasn't really well thought out. The guy was just arrested, sentenced this week actually.
Right. And it wasn't real yield. This was like artificial.
No, it wasn't. That's the problem, right?
Yeah.
Because the problem is like, okay, I'm not a huge fan of regulation, I have to say, but on the other hand, when we are talking about products where you are trusting a centralized party, which is the case with a stablecoin, for example. If you buy Tether, you are trusting Tether, right? If it turns out Tether doesn't have the money they say they have, then it's going to blow up. It's the same with USDC, right? You are actually trusting Circle. If Circle doesn't have the money, and then the peg is going to be lost, and USDC is going to go to zero. Of course, it's not going to happen because those are huge companies and they have been in the space for a long time. But when there's a new product being launched like Terra Luna, you don't really understand, where the yield is coming from. Where is it trustworthy? Do they have enough collateral for all the, stablecoin that was minted? And here's where regulation is really useful because there's an asymmetry. When you are on the buying side of these things and you're dealing with a centralized institution, you don't know what they're doing. You don't know if they have what they say they have and if it works the way they say it works. And this is where regulators can come in and they have access to it. And so I think in the case of what we do with Rails, I think the cool thing is that all the assets we're bringing on chain, they are regulated. And so they're coming from like large financial institutions. They've been around for like, decades. They're regulated, and so it's much more secure. And I think, this is what we are, trying to do is to enable people from all over the world to have access to these high yield bearing assets with low risk, right? And I think Spicenet is really useful because if you think from the point of view of our clients, they want maximum distribution.
Yes.
Right. And so, by integrating with Spicenet, this means they have access not only to the users of Rails, but to all the EVM users where Spicenet is integrated to.
Yeah, totally. And I think what we're seeing right now is sort of this trend of like compromise on both sides. So for the longest time, DeFi was everything we're gonna rebuild finance from the ground up and we're gonna rethink everything. And then the thing you start to realize is like traditional finance did a lot of things right. Like people want regulated products that are yield generating. This is a very attractive thing for me to keep my funds in, right? That's something that's done correctly. The same way, like we look at brokerages and say, that's also doing something right in some cases, right? There's definitely some benefits to that. I think we're seeing this kind of age of compromise where we're meeting TradFi halfway and saying, okay, yeah, fine. We have DeFi. It's good for distribution. Anyone in the world can now buy these assets. That's amazing. Anyone can do it at any time. They're not going to close. That's amazing. We have like this cohesion between your asset types. That's amazing, right? And the list goes on and on. But now we're realizing the people that are going to use DeFi are still going to want to buy regulated assets. Like the rest of the world wants to buy regulated assets, right?
It kind of boils down to trust, right? Because it's like you have to ask yourself, what am I trusting here? Because if you go to like Aave or Uniswap even, you're kind of trusting, okay, you're trusting the company that built it, but also, trusting the code because the code is open source, people check it and it's audited. So you're basically trusting Ethereum and you're trusting the code, right? And it is decentralized in that sense that there is no kind of centralized entity that's actually doing the transactions themselves. But if in the case of stable coins and other instruments, this is different, right? Because it's not decentralized in the sense of like Uniswap and Aave are. They are centralized entities that are assigning value to a token. And if the centralized entity doesn't have the value they claim they have, then the token is worthless. It is different from, say, for example, Ether in Ethereum. The value of Ether doesn't come from a centralized entity, right? It's just, it's just there. And so I think, people also need to understand where, what you're trusting really when you're buying any kind of asset. And in the case of centralized entities, I think regulated assets are much safer.
Yeah, no, totally. And so what you said, like there's pretty high APY products on Rails because you have, maybe smaller economies, right? Typically have some higher APY assets because it's less saturated, right? Do you have any examples of what kind of APYs on which assets people are looking at on Rails?
Yeah, so again, so Rails is made of two pieces. One is the permission chain system. So this is installed by financial institutions on-prem. It's like centralized, okay? And it's just so that they have the correct kind of Rails, no pun intended, so that they can, create ERC20 tokens and so that they can tokenize things, privately and without, concerns around, compliance and regulation and things like this, because everything is on-prem. Then once they've tokenized it, then they can distribute it on the public chain. Our public chain is in testnet mode right now, so we don't have the mainnet is not online yet. The mainnet's coming, Q1 2026. And so, what people are doing now is they're already tokenizing the assets on the permission chains. This is what Nuclei is doing, and they tokenize these, commercial receivables. And again, so what commercial receivables are is just basically, let's say, that a company bought computers from Dell or whatever, right?
Yeah.
And so now Dell issues an invoice for the buyer. And so the buyer now owes Dell some money. And let's say they owe Dell $1,000. Okay. Now they will only pay Dell after 30 or 60 days. This is usually the time the time period we're talking about. But say that Dell wants the money now. What they can do is they can sell this receivable to an investor. The investor will pay, instead of 1,000, they will pay, let's say, 990 dollars, and the last $10 is yield that's going to be collected by the investor in 60 days. So because they gave you 990, but they get 1,000. And so this kind of product is what a commercial receivable is. We also have clients doing credit card receivables, so there's all sorts of receivables. And because there's, this is of course there's risk. Maybe that the company never pays.
Right.
If they never pays, then you need to collect later. But the way to reduce the risk is that instead of selling each individual, receivable to investors, they buy like a basket of many receivables. So the risk is like diluted in the basket. And even in a basket, so you usually see it's difficult to know. There's different types of receivables. It's between 10% and maximum 20 and 25%. This is because of course, there's risk, but it's a different kind of risk. It's a risk of a few of those receivables are not going to be paid, but it's very low, and it's diluted because there's many receivables. But there's no risk of someone exploding, the token exploding because everything was alive, because everything is regulated. And so this is what we are doing in Rails, and now the next step is to launch mainnet and then distribute this all over the world, and hopefully with the help of Spicenet, not just to Rails users but also any EVM chain user.
Yeah. No, that's super interesting. Like the basket of receivables. Is there anyone working on turning that into like a strategy, maybe like a vault strategy that the public could participate in as well?
Yeah, that is the whole idea, right? So that the public can purchase these vaults, these quotas of the vaults, and that the vault pays the yield, right? And this is how we do it in DeFi. It's just that now we need to have the assets ready and have them tokenized so that they can then be distributed, right? And I think the reason we did it this way is because by talking to financial institutions, we realized that there's a huge amount of concerns still from institutions to tokenize directly on public chains. There are concerns around privacy. I mean, institutions don't really want their competitors to see how much what they're doing online. They don't want to see how many tokens they're tokenizing and so, and who owns what. They don't want the competitor or the public to be able to see their own client's accounts. I mean, it's against the law even. So there's lots of concerns and around also scalability, the speed of these networks. And this is the reason why we decided in Rails to launch the private chains first, so that we can sell to these institutions and they can start tokenizing. And then as a second step, then there's the public chain coming in Q1 where they can distribute it.
Yeah. So then you don't see all the behind the scenes. You just see like the wrapped results of that.
Right.
Okay, this is your yield bearing asset that you can purchase on the public chain. You don't have to see like all of the tokenized assets that are being exchanged under the hood that are producing that yield.
Yeah.
Yeah, no, that's super cool. And then from there is where we can like distribute it to the rest of the world and interoperate it with everything. I mean, yeah, I think that we'll get to a point where most of the collateral on the big exchanges that people are using on chain, like your Hyperliquid, Lighter, all these things, will just be yield bearing, because there's not really a reason. There's not really a strong reason if you can have like a very risk adjusted stable coin that's producing yield and trade against that, you might as well do it. So I think we'll get to the point where we see that, and then the assets that you guys are bringing to the table become super interesting for that. And that's like probably the most exciting institutional use case of how we can work with you guys, is like allowing all of the margin on that Rails public chain to interact with the trading that you're doing elsewhere, especially when it comes to like you could hedge against these strategies, right? So like in the case of and I'm not a hedge fund, so I don't know exactly how you would do this, but in the case of what you were talking about with collectibles, like under certain economic conditions, the expected value of that will change drastically, where okay, all of a sudden maybe interest rates went up a bunch, now you're getting a lot more people defaulting on these things. Like you can actually hedge against those things, and it's a complex strategy, but you can only really do that if you can effectively manage your margin between those strategies and the places you hedge it.
Let's talk about that. I want to understand that better. So you're saying if I want to trade futures, let's say in Hyperliquid, then you need margin, right? You need to kind of deploy margin so that you can trade. And so you're saying you could use these yield-bearing assets as margin. Is that right?
Yeah, exactly. Like,
and what's the advantage of like, why would you use a yield-bearing asset as margin? What do you gain from it?
You gain yield on the underlying. So like if I'm a Hyperliquid user, I've had like a couple thousand USDC in my Hyperliquid account for over a year now. I mean, most of the time I'm not trading it actively. It's just kind of sitting there. I could have been earning yield on it, and then when I decide, oh, these are market conditions in which I want a long or short Bitcoin, then it's there for me to do it. But in the meantime, I could have been earning on it.
There's another example of this, which is if you're doing lending, for example. Okay, you deposit collateral, and what the way it usually works is, let's say you deposit 10 ETH, and then you take a loan against it. The thing is that they're gonna charge interest on your loan, right? And so over time you owe more and more and more. So maybe you could use these yield-bearing assets as collateral, so that the yield kind of cancels out the interest of the loan.
Yeah, that as well. That's another thing. Like, and there's all sorts of situations, right, like that. Like whenever you're trading derivatives, you're paying a premium at some point. So whether it's an upfront premium, like on an expiring options contract, or it's like an ongoing funding rate, you're going to be paying premiums to use these derivative products. And then, just like you said, you can cover some of, or all of, or more than that premium if you have yield-bearing assets kind of as your spot capital.
And between you and Kartik, what is the role of each one of you? Kind of, who's the techie guy? Who's the kind of business guy?
Yeah, Karthik's the techie guy. So we haven't given him a lot of time in the sun here. I think he's working on some stuff with one of the devs as well at the moment. But yeah, Karthik is building the product. I'm running operations, overseeing the marketing team, and everyone that's not an engineer. So yeah, if you want deeply technical questions, I mean, he's definitely the guy that's going to answer
Yeah,
them for
maybe
you.
just like a high level. I don't know if Karthik is available now, but just a high level explanation. Because I know that we have some developers listening. So, I understand that the product is basically an API, right? But there's also like a UI that you can kind of integrate for swapping and so on.
Yeah, you don't actually have to integrate. You can integrate into your UI, but yeah, I'll let Karthik. You want to explain how people can use our APIs?
Yeah, sure. So when it comes to UI, so the product I think you're referring to is Spice Flow. So we have UI components for like different use cases. So we have one kind of component for swapping. We have one component for LPing. We have one component for kind of caution deposits. And then you can extend this to multiple types of like use cases you're doing. And then why this kind of separation exists is that developers can easily embed these widgets into their applications. We give a one-click onboarding flow. Users can select their onboarding network and wallet, and then when they actually come to, let's say, providing liquidity or swapping, they can select their source chain collateral. In case of swapping, they select what token they want. But then in terms of liquidity, they can directly provide liquidity from their source chain. In terms of cross chain deposits into vaults and stuff, they can directly select this the source collateral, and then just sign, and they just have a one-click user experience, so they don't have to sign multiple wallet approvals, anything like that. So they just sign once, and then it just executes across networks, and then we provide it as a embeddable widget for applications.
And you use like you integrate with some of those wallets, so some wallets that can be embedded right on the as a widget
Yeah,
on the
yeah, yeah.
web.
So you just select your network like Arbitrum,
Mhm.
and then you just click like MetaMask, and then your MetaMask would connect to the Arbitrum network, and then just shows up. Okay, you have USDC and USDT in these balances with Arbitrum. You can use this product to do these actions on behalf.
But I saw like you guys also integrated with like Privy, this kind of.
Yeah, yeah, correct. So Privy is what enables the one-click UX.
Oh, I
Um,
see.
so the user designs like a Privy pop-up to approve the cross-chain bundle, and then it just executes under the
I
hood.
see.
Yeah.
Cool. And if developers want to kind of try them for themselves, what should they do?
We have docs available right now, so just developers should go to spiceflow-docs.spicenet.io. I don't know if there is a chat you can drop this into, but yeah, that is the developer docs for SpiceFlow.
Okay, and in terms of like the vision for the future, so which stage are you guys in right now, and like can people start using it right now? How many chains are you guys integrated to, and kind of what's like in the roadmap for 2026?
Yeah, we're looking at mainnet quite soon here. We just passed our first audit. So you might have seen the CoinGecko announcement on that. I think it was 2 weeks ago now, by Hashlock. But we have a bit of the tech to still audit yet before we have real funds flowing through it. This week we actually have our first like DevNet campaign going live with one of our integrations called BrokeX. That's on the Pharos chain, and at the moment we're on 9 chains, and yeah, we'll continue to scale that out. Mostly EVM at launch, or all EVM at launch, I should say, but then scale that out mostly more EVM, and then eventually SVM. But yeah, we're looking at mainnet in Q1 as well of 2026.
Good timing.
Yeah, exactly.
And so you mentioned even non-EVM chains. So the plan is going to be integratable to like Solana and I don't know other chains that are not EVM. Is that the plan?
Yeah, that is the plan. It gets a little more complex. Like
Yeah.
there's Karthik, you can explain what would need to be done maybe for us to offer Solana, but Karthik has told me we can definitely do it.
Yeah, so for EVM, we basically use a protocol called as EIP 7702, which allows users to execute atomic bundle transactions. So it enables things like batch execution, gas sponsorship, so on and so forth. Uh, that the equivalent of that does not exist in Solana yet, and doesn't exist in like newer, immature ecosystems. But then we can expand to Solana without, EIP 702. So you can not have things like gas sponsorship and so on, but then they have some alternatives to it, which is what we can explore. But yeah, it'd be less a feature complete. But yeah, that is the kind of requirement for us to expand to new chains.
Cool. Okay. Yeah, that sounds cool. And our roadmaps are synchronized as it seems, because we're launching mainnet in Q1, and hopefully, we're gonna have some yield-bearing assets coming from our clients. We have Nuclear that we had an AMA recently. We also have Cielo, which is the biggest credit card acquirer in the southern hemisphere. We have a new company that I cannot mention that because the marketing guys got because we have a PR coming. Um, and yeah, so we have a bunch of clients that we're closing on the permission chain side. And obviously, our kind of vision here is that as we close more and more of these permission chain clients, this is more and more tokens that are going to have to be distributed on the public chain. And I think, the partnership with Spicenet is going to be very important. So we can really kind of distribute this as wide and as possible to as many users as possible.
Yeah, what kind of things can people interact with on the public chain to get access to these assets?
So, I mean, we are bringing developers. We had a hackathon in Argentina. I don't know if you guys were in Argentina, a month ago.
No, unfortunately, we didn't make it there.
For the Dev Connect, and so we had a very nice hackathon. I was surprised with the quality of everything that people brought. But the plan is we are building a blockchain, right? So I would, as much as possible, try and avoid building the application layer as well. I mean, we can. We have people here that can do it. We actually built, for people that are listening, you can go to our testnet, and there is actually an application there where you can simulate, creating these assets and then putting them on vaults and then purchasing a piece of the vault, and then you can see the yield part of it. So this is all working. But my intention would be to have developers come in and build all sorts of things that we cannot even imagine. Because Rails has all these different ways of doing things, with the permission chain, with scaffolding for KYC, new consensus mechanism that we're introducing. There's so many new things, privacy protocol, Enigma. So there's so many new things. I really want to bring more and more developers to use their creativity and look at what we can offer, and then build new applications on top of Rails. And then hopefully, once people build them and they can connect with, Spicenet, and again, you're offering this to the wider audience.
Yeah. Well, yeah, we should definitely start connecting with some of the champions that you're seeing coming out of those hackathons and the tech that they're building, because we can kind of guide them through the integration process, and then even do some testnet campaigns. So bring some users directly to those apps and like get some eyes on them before you guys go to mainnet, so that we're ready to be right there on mainnet. We can get hopefully some liquidity sourced to serve you guys right on launch, and then help with that onboarding process, because that's, I think, one of the biggest challenges launching a new chain is like onboarding that first TVL. So that's kind of the reason why we're interested in talking with you guys and other chains that are kind of at their launch stage, because I think that's where we make the biggest difference.
Yeah, for sure. Cool. All right,
Yeah.
then. So I think we're coming to an end now. Is there anything you wanted to say, like as a closing remarks? Maybe like how can people find more about Spicenet, and any kind of big announcements you want to make?
Yeah, I mean, of course, give us a follow at Spicenet on Twitter. It's just straight up at Spicenet. We have that campaign this week going live. It is kind of gated to the people that have been contributing to our community, but there will definitely be more of these, and we'll open them up to more people as time goes on. So yeah, if you want to see what the initial first integration that's public and visible looks like on Spicenet, give us a follow and we'll make sure you see it from there. We have a fun portal that you can get involved and do some quests with us, and that'll also get you lined up to be part of the next campaign. So yeah, I would just say follow us and check out that portal. We'll make sure you see everything from there. And then yeah, lots to come early 2026 as well with like the MVP of our other product and stuff. But I won't get into that too much today because we don't have the time. But yeah, if you give us a follow and check out the portal, you guys will definitely be ready to see that as it comes out.
Cool. And for people to learn more about Rails, you can go to rails.com. So that's Rails with a Y. Or can go to give us a follow on Twitter as well. So Rails Labs. Yeah, and we have lots of campaigns going on. We have season 3 live right now. So there's lots of opportunities for people to interact. So we have a testnet live, people can test it, and we have a Discord channel. So there's a lot of ways that people can interact. Yeah, and 2036 is looking very promising. Bitcoin is down now and Ethereum is down, but I'm sure this is temporary. For us, those of us that have been in this space for long enough, I think we are kind of, we don't even look at the price anymore. We just keep building.
Yeah, exactly. Head down, just keep building. I mean, I think it's like not the same as other bear markets we've seen where the price of Bitcoin is the only thing keeping us alive. There's so much more happening now, so much more being built, and people are starting to actually use the products. So I think it's great, and you guys are going to bring some assets to the table that don't rely on the price of Bitcoin being high. So that's cool as well.
All right, guys, thank you so much. Thanks for your time.